Hi, everybody. This is Bennett Sebastian with Envision Construction and Development. Today, I interviewed Chuck Mitchell with First Capital Property Group. First Capital is a commercial real estate brokerage company here in Orlando, and they work with landlords and tenants and investors alike. And we're going to learn a little bit about choosing the right location for your business, how to budget for your office or industrial space or retail space. And we'll talk a little bit about leasing versus owning and the pros and cons of each. So without further ado, let's go ahead and jump into that interview. Hi, Chuck. How are you?
I'm doing great.
Happy Friday
Thanks
to
for
you.
that. Yeah, thanks. Thanks for the opportunity to us to visit.
Hey, thank you for coming on and sharing your thoughts with the audience. You and I have known each other for quite a number of years now, and I have a lot of respect for you and your company, and thought, what a better person to talk about commercial real estate than yourself.
Oh, great. If I can help you out, I'm glad to do that and help out your clients.
Awesome. Okay, so getting into the topic again, which is commercial real estate, I see commercial real estate as two things. One, it's a business tool for companies to utilize to operate their business, and the other is an investment vehicle for people to create wealth. That's essentially what it comes down to. And so I want to talk a little bit initially about commercial real estate as a business tool. So companies that are looking for real estate, what does the process begin? How do you choose the best location for your company, and what is that process?
Yeah, we were on a call this morning with our tenant broker and with a client that it was mine that I basically kind of turned over. I worked with a gentleman 3 or 4 years ago, came back. He ended up renewing where he was. He came back and said, "Can you help?" I gave him to one of my young guys, and so he was working on. So some of the questions we asked, he said, "Okay, first off, would you stay if you could?" So we talked to their representative and found out if they would stay or not. Then we said, "Okay, where of your customers? Do you have a database with the zip codes of the folks that are your customers?" The guy's been in business over 10 years, and he is a retailer. And so, why don't you talk, if you don't, talk to your merchant who takes care of your credit cards and find out where those zip codes are of those folks, and then find out where your demographics are.
That's
Then,
smart.
then we're going to kind of draw a circle, 5 miles or, 15 minutes, whatever the drive is, and then find out where your customers are, because he wants to put another new location. So one of the other things, he said, "Okay, where are your competitors? Find out where they are. Let's put a map together, start drawing circles. And so where would you like to put your second location?" And so one of those things is obviously demographics are important. He has to have a profile. He has to help us, give us a profile of his customers so we can help him find the right location.
Right. Okay. So you do a little bit of retail, office, and industrial as well. Okay.
Yes.
So how much should people be budgeting for their real estate? On a annual rental basis, as a percentage of revenue, and does it vary from one product to another?
Yeah. I would say that if you're in an office space, it's going to be somewhere between 3 to 5%.
Okay.
If you're in, I think if you're going a little bit higher in medical, you may be on the top end of that. So the 5 plus. If you're on retail, you want to be somewhere between 10 to 12, no greater than. And so there may be variations of that, but I think that's one of the things that's why we ask, what is your budget? What's your business plan? How much money, when we talk to tenants, either we're going to tenant rep them, or they're calling us and saying, what is do you have space available? We're asking those questions because we want to make sure they're successful. The last thing we want to do is have unsuccessful tenants, particularly in the difficult times right now. It's because we don't really know how the economy is going to go. Mm-hmm. And there are many times we don't know how the economy is going to go. So one of the things we need to do is make sure we have successful tenants. And again, before tenants become a relationship for us. Okay, we still have a fiduciary with the owner, or we have a fiduciary with a tenant, but no matter what, it's going to be a client for us down the road.
Okay, so we're talking tenants here. What is the process to get into a lease? So they're doing a lease application. Are they sharing their financial statements? You talked about a business plan. Is that pretty common for an office user as well to do all that?
Yeah, I would say that from an office user standpoint, it really depends. There would be less, more of a business plan for retail, particularly a startup retail.
Right.
But from a business plan, from an office standpoint, yeah, they have to have a business plan. They got to have the budget. They got to know what they're looking for. One of the things is easy to do in an office space is said, oh, how much square footage do you have now? How many people do you have if they're moving? And so one of the things I like to do is when we're doing tenant rep or even just they're getting close. I like to go look at your space, particularly the tenant rep. Go look at their space. See how it's laid out. Is it efficient or not efficient? What kind of people do you have? Okay, you have this size reception area. Do you need a bigger reception area or a smaller reception area? These days, you may even need smaller reception area because a lot of things are done more online, on calls and those kind of things. So you're probably entertaining less people in many cases. So we found is over the last couple of years, the reception areas have gotten less in size of space. So those are the one things that when we ask those questions, and we want to know what they're looking at, because a lot of people, when they say they're experts in their business, right? They're not real estate folks. So we've got to ask a lot of questions to be able to translate what they want into what we can to provide for them. And so that's really important, asking the right questions. And so looking at their space and says, okay, I saw the size space you are, and obviously we know the tricks of the trade. It's real easy, just count the ceiling tiles, right? And so we know what size space they are. You want something bigger, smaller? How do you want to accommodate? What changes would you make? And so those are the things that we have to ask a lot of questions. They're experts in their business. They're not experts in real estate.
So again, talking about leasing, I'm obviously a contractor. We do tenant improvements. How does it work, with an office tenant versus a retail tenant versus an industrial tenant? My experience is that the retail tenants tend to do their own build outs, maybe with a small allowance from the landlord. And on the office side, the landlords will typically do a build out to a building standard. Anything more than that would come out of the tenant. What's your experience?
Yeah, on the retail side, it's we don't get involved in a lot of interior improvements, unless it's just getting it back to a shell space or just cleaning space up. So we'll clean space up, we'll demo whatever we need to do, and then we usually have a small allowance for the tenant, and they kind of do what they need to do for their space. For the office side, I think this is really a critical place for the office owner as well as for the tenant. You need to be able to meet the tenant's needs, but you want to do it as efficiently and cost effective as possible. So a lot of times we don't have a lot of new space on the market unless it's Class A space. And so a lot of people come into second, third generation space. So there's a lot of things that people go, okay, I like it or don't like it, or we can modify this. A lot of people can't visualize what needs to be done. So it's really important for the leasing agent or the tenant rep to be able to help visualize. And a lot of times you may not be able to do that unless you get the building owner to say, hey, can we go do a one-line sketch of the space and kind of do modifications? I came from the background of developer, so we actually had 2 space planners in our office. And so when we had somebody that was hot to go and looking at our space, the next step was bringing the space planner in. And the next step after that was the next office, we had the estimator in, right? And so the estimator would kind of estimate what those costs were, and we put our deal together. And that's changed to a certain degree. So that's why it's important, like somebody like you who comes in and says, hey, give me a one line and I can give you an estimate. Because a lot of times from the office leasing standpoint, different from the retail, is that I'll give you an allowance or I'll pay up to a certain amount. But okay, we understand what your requirements are. Let's put it on paper and let's get an estimate of that. And then you have to negotiate. You go say, okay, that fits into our estimate, or this is a little bit over. You wanted this type of sink or this kind of this and this kind of that. That's kind of outside the norm. you'll have to pay for that. And so those are the kind of things that we kind of deal with. And I said where it's important is that an office owner, if he is building out a space every 5 years, it's going to be a hard time for him to recoup all that space. He's going to get rent, but he's paid money up front to fix that space up. So it's very important for the building owner and the folks that are representing them to be able to say, hey, we need to put dollars in that will stay a long time. And so you just have to understand that. And so that's, as you deal is, I'm sure building owners are talking to you, Bennett, they're saying, hey, I want to make sure these dollars stay. I don't want these dollars to be tenant unique dollars. So when that tenant leaves 5, 6 years later, we got to rip it all out.
Yeah.
And so that's really important to have somebody that can help put a deal together and almost, I would say, value engineer the deal. You want to make the lease deal, but you also want to put good dollars into the space that lasts.
Yeah, smart. I've done a lot of medical build outs, and one thing nice about medical is that the floor plans tend to stay the same from one use to another, unless it's a very specialized use, going
Right.
from primary care to, imaging or something like that. But for the most part, you've got a certain amount of exam rooms, a nurse station, triage area, reception area. And so you can generally not have to put a lot of money back into those build outs every
Right.
5 years. So that's kind of a nice thing about that. But yeah, office can certainly vary from one tenant who wants an open floor plan to the next tenant who wants a bunch of private offices and yeah, so that can get expensive for an office owner. But so great. Let's talk a little bit about owning as well as a business owner. So you can lease or you can buy your real estate for your business. So what are some of the pros and cons of leasing?
Well, the pro of leasing, excuse me, the pro of leasing is you have the flexibility. That's really the biggest. And so you don't know if your company is going to grow or not. So depending on what type of company you are and how you're growing, if you're growing fast or you have potential to contract, you want to make sure you lease. The leasing also, the availability is you don't have to have the dollars up front. So obviously most people who start their business lease because they don't have to invest in real estate. So they invest in their business. They don't invest in bricks and sticks. And so that's what the primary, a lot of the big firms, obviously, most big law firms, they're leasing because they don't know if they're growing or contracting 6 or 7 years later. The smaller law firms, they may own it. But from the leasing standpoint, it usually gives you the flexibility to grow. It gives you an opportunity to get this limited liability. And it's also, you don't have the dollars up front. And so almost every new type of owner business will lease.
Okay. And so the cons of leasing?
Yeah, the cons of leasing is that you're paying somebody else every month, right? So in many cases, depending on the lease, you think you're in control with that lease, but there's provisions in that lease that may have recapture of expenses that expand. So almost every office lease would have recapture of taxes and insurance and other operating expenses that are over a base year. And so if taxes go up quite a bit, the tenants pay that share. And so they may not know that. That's why having a good tenant rep helps them understand that.
Yeah.
So you think you have your cost control, but you don't. The other part is that in leasing, there's always annual increases because that owner wants to keep his dollars whole as best he can. And so those rents increase annually, but when renewal times comes, they're going to increase per the market, and you don't know what the market's going to be like.
Right.
So it could go down or it could go up. So those are the things that you just have a lot of uncertainty, but you don't have the dollars invested and you have the flexibility. So you're paying for that flexibility one way or the other.
Well, what's an average annual rent increase?
I would say that most of the folks right now have been satisfied for about a 3% increase for several years. And that's really because it's tied to inflation. So when I got into the business, we didn't have fixed increases. It was tied to the CPI. We might have had a floor and a ceiling, but it was tied to the CPI because CPI was 10, 11, 12, 8, whatever, it just went all the way up. And so, but nowadays, since inflation's pretty much been controlled, people are pretty satisfied for 3% increases.
Okay. So owning.
But just to give you an example, we were looking at representing a tenant, and we were doing a tenant rep, and that retail tenant said, keep the same rate for the next 5 years with a 1% increase. Why? Well, that's outside the norm, but they've lost some tenants in the retail because of market conditions, and they want to keep them. So.
Yeah. Okay. And so pros and cons of owning, and I know this is going to be sort of the opposite of leasing, but what are some of the pros and cons of owning?
Yeah, obviously the pro of owning is that you're paying yourself or paying the bank, and you're paying down the principal of your mortgage, and so you own something. So that's a big advantage. The disadvantage is if you are a dynamic company, you may outgrow your own space, and now you've got to go sell your space or lease it or whatever, or go find another location to satisfy your needs. So owning is really a benefit. For a good example would be, there's two lawyers. They break out of a bigger law firm that lease. They want to own. They don't want to grow. They want to just grow their business internally, but they don't want to grow a lot of folks. And so they'll buy a building and lease it to themselves. So the two partners, partner A and partner B, will own the building or in a syndication or LLC, and then they'll lease it to their business. And so the individuals get the benefits of depreciation and their appreciation and depreciation, and their business just pays rent,
Okay.
like anybody else.
Okay.
So the advantage is that you own something, you hold something, and you're building equity in it.
Okay.
The disadvantage would be you don't have the flexibility.
Right. Right. Well, that's pretty good overview. Thank you for sharing. Is there any other final thoughts that you want to share?
Well, I think it's important for folks it's important for folks to find good people to ask good questions, or maybe ask the questions. I don't even make the statement, I don't know enough. Can you help me? But you got to trust the folks. So I think it's important, having you and our relationship for many years. It's good just because we trust each other, right? And now we're helping each other out. But it's really good for people to ask questions from the right people, the people that look after your interests, because they can make the wrong decisions with wrong information. And I think it's really important in real estate that don't make an assumption. Don't make an assumption that, if I buy this building, it'll only cost, I can't cost more than $20,000 to fix it up. Well, don't make an assumption. You don't know what the codes have changed. You don't know what's behind that wall or in that ceiling. So you need to be able, for us as professionals, we need to be able to refer other professionals to them and say, hey, let's get a correct amount, correct information, and a correct plan. Let's move forward in doing that, because I see so many folks making the assumption when we take them to a building and, hey, don't assume that. We need to get a price. Let's work our contract to get enough time to get the right price so you can make the correct decision.
Yeah, get a trusted advisor. And you, as a commercial real estate broker, you're sort of in the center of activity. You've got relationships with contractors, with insurance people, with attorneys, with appraisers. So you can kind of direct these clients.
And bankers, and bankers
too, right? Of course, yeah. So Chuck, how does somebody find you? What's your website?
Yeah, it's First Capital Property Group, and it's fcpg.com.
All right. Well, Chuck, hey, I really appreciate again you coming on, taking this time to shed some light on the commercial real estate world, and I'm sure it'll be helpful for those of those people that are looking to either grow their business or grow their wealth. So thank you so much.
Hey, buddy, I appreciate you, and thanks for the opportunity to be on.
Absolutely. Take care, Chuck.
Okay, take care.